Let's go to Tom Piotrowski over at CommSec. So, we finished last week on a downer, Tom. Are we back on the up today?
We are, Pete. The market should kick off with a reasonable improvement this morning, up by about 0.5%. So if that were to transpire, that would essentially neutralise the bumpiness of last week and indeed the loss that we posted in a holiday shortened week when the market was down by a little under 0.6%. And the reason that we'll get off to a positive start is that we saw a strong finish for US markets on Friday night in slightly counterintuitive terms because we saw some very strong employment figures, but nonetheless the Dow Jones rose by 0.8%, the S&P 500 up 1.1% and the Nasdaq up by 1.2%. As I said, a counterintuitive gain for stocks given the strength of the March employment figures that we saw in the US. More than 300,000 jobs were added to the US economy that month, Pete. So that was well ahead of the 214,000 that the market had been thinking of. And the unemployment rate also dropped to 3 point, I beg pardon, it was came in at 3.9%. So that in itself is the issue for the markets. They are banking on a rate cut in June. We've recently seen stronger manufacturing numbers, stronger activity in the services sector. We have seen these strong employment numbers which corroborate the fact that the US employment market remains strong. And the markets are now beginning to second guess a little bit whether or not we'll see a rate cut in June from the US Federal Reserve. There's still a 1 in 2 chance that they'll do that, a little bit better than that. And that was one of the factors that sustained markets on Friday. So as far as the local picture is concerned, we have seen quite an upswing in commodity prices over the course of the last week. They moderated in some terms on Friday, but generally you had copper, aluminium, gold, all up in the order of about 5% in weekly terms. Iron ore was the blemish there. It languishes around a 10-month low. But that and the fact that oil prices have had a pretty decent rally last week, up by about 4%, that should sustain the mining and energy stocks in local terms today, underpinning that 0.5% gain that we're expecting.
Okay, Tom Piotrowski, thank you.